So let us start a new topic: tax invoice, credit and debit notes. Tax invoice, credit and debit notes. What is the purpose of this topic? As we have just covered the topic of place of supply, the relevance of place of supply is that it tells us which is the state which will get the revenue. That is the relevance of place of supply. After this, now the question arises, by what time I should pay the tax to the government. So for this I need to have the topic time of supply. Time of supply, not tax invoice, time of supply. The topic place of supply tells me the state or UT where revenue will go. Time of supply will tell me by what date my liability to pay tax to the government arises. This is the relevance of time of supply. Time of supply. If you don't give me the time, then I will not deposit the tax for 2 months, 3 months, 4 months, 6 months, 8 months. So time of supply will tell me, will determine my liability to deposit tax with the government, to pay tax to the government. But I cannot discuss the topic time of supply without discussing the topic of tax invoice with you. I cannot tell you the exact time without discussing the topic tax invoice with you. Though my intention was to discuss the topic time of supply, but I cannot discuss it without discussing the topic tax invoice. So that is why the main purpose of tax invoice is that when we will discuss after this topic time of supply, the concept of tax invoice are clear in your mind. If you don't know the concept of tax invoice, you will not understand the concept of tax time of supply. So I am starting with today with the concept of tax invoice, credit and debit notes. It is having a separate chapter in the CGST Act. CGST Act, Chapter 7 of the CGST Act deals with the topic tax invoice, credit and debit notes. Start section 31. So let me first show you the CGST Act, and then let me first give you an idea that what topic I'm going to discuss with you. So this is my CGST Act. As you can see, it is chapter 7 of the CGST Act, tax invoice, credit and debit notes. Tax invoice, credit and debit notes. Within this chapter, some sections which I will cover are section 31. All the sections basically I will cover. 31A, 33, so this is new chapter, chapter 8 of the CGST Act, accounts and records. So starting from section 31 till section 34, I will cover with you the topic of tax invoice, credit and debit notes. Now what is tax invoice? In a layman language, I can say that when I go for any, I ask for a bill. That bill will be having the details that what quantity has been spent on, etc., etc. In layman language, it is a bill, but the same bill, when you read as an expert of GST, you will call it as invoice or tax invoice, one and the same thing. You call it as invoice or tax invoice, it's one and the same thing. So when I say tax invoice, I'm not raising any special issue. It's nothing but a bill, that's it. A document which is having some particulars of quantity, item purchased, how much quantity purchased, what is the rate, how much is the tax, where it is sold, etc., etc. So tax invoice is nothing. As an expert, I will use the word tax invoice. As a layman, anyone can use the word bill. Now under GST laws, as a supplier, as a seller, I may sell goods or I may be supplying services. Now both are having different time limits. And why tax invoice is necessary? Until and unless there is a tax invoice, you cannot determine the liability of GST. If you do not know on which date which products are sold, how can you determine GST? If today I have purchased a laptop from any shop, if today I have purchased a laptop from any shop, if the laptop seller will not give me any invoice, how can I compute the tax? And when will you determine the liability of this laptop seller to deposit the tax with the government of India? So to make sure that government gets the revenue on time and there is no delay, deliberate delay on the part of the seller to deposit the tax, the topic of tax invoice comes into picture. Now, topic of tax invoice is there. Suppose I have purchased this laptop from my friend, and when I ask the bill, my friend says that, yeah, you purchase, you get the, I will give you the bill after 7 months, 8 months, there is no problem. Since that person is my friend, maybe I will also trust. But till bill is issued, government is losing the revenue. Until unless there is a bill, government is not getting the revenue. So this laptop seller, who is my friend in my example, will delay the payment of GST to the government, which is a wrong thing. That is why under tax time limits are given that by which date seller has to issue the tax invoice. Seller cannot delay it. So this is what I'm going to discuss with you. And let me start with my first section. Let me first show you the act. This is what my act is. Section 31. I hope it is clear. Heading tax invoice. Within this subsection 1, a registered person supplying taxable goods shall, before or at the time of, so technically it is nothing but date given, time given. A registered person supplying taxable goods. Now in this, two words are relevant. Registered, that means a person must be a registered person before issuing a tax invoice, and supplying taxable goods. I may be supplying exempt goods. So for that, section 31 subsection 1 is not applicable. It's only for a registered person who is supplying taxable. Now goods are of two. In some cases, goods require movement. So where the supply involves movement. And in some cases, movement is not required. Goods are so much heavy that those are to be assembled at the site. It's an example only. So goods can be of two types. In case of goods, there can be two types of supply. Some supply of goods require movement, where goods are moved from one place to another, like laptop example, which I have given. It requires movement. I have purchased this laptop, so I will move this laptop from the shop owner to my house. There may be some goods which does not require movement, like installation of heavy machinery. For example, any company wants to install a heavy project, heavy machine. So the supplier cannot move that machine. These cannot be loaded on any truck, etc. These have to be assembled at the site. So in that case, raw materials might be moved, but as a recipient, I'm not purchasing raw material. This supplier is moving. I need finalized ready machine. So in installation of machine, logically you can think in your mind that movement of goods is not involved, only delivery will happen. So in both the cases, what is the concept? Now you clearly read this point. Section 31 tax invoice subsection 1. A registered person supplying taxable goods shall, before or at the time of, clause A, removal of goods for supply to the recipient. So what a registered person has to do before or at the time of removal of goods for supply to the recipient, in case where supply is requiring movement of goods, or clause B, delivery of goods or making available thereof to the recipient. When goods does not require movement, then of course you will deliver that. In both the cases or in any of the cases, you have to issue a tax invoice. So it is the compulsion. It technically has given you the deadline. Like in my example, if today I have purchased the laptop from my friend, invoice, this friend who is the supplier has to issue the tax invoice on that same point of time. He or she cannot delay issuing tax invoice. If delayed, then there is a problem that way. So issue a tax invoice, and this is having what? So some of the points are, it must be having description what things are sold, quantity, value, tax charged from the recipient, and some other particulars also, date, etc., etc. This is what my section 31 1 is. I hope the concept is clear. You must remember that in 31 subsection 1 only goods are covered, taxable goods are covered, and registered person is covered. If registered person is supplying the goods, for example, if today on 20th March 2021, if I am purchasing laptop from a supplier who is a registered person, then today itself, before removal of goods from that shop, if I come out with laptop outside that shop, I must be having tax invoice with me. If today I have purchased the laptop at 11 a.m., then today itself, if at 5 p.m. tax invoice is issued to me, it is also wrong. At 11 a.m. I purchased the laptop, I bought it at my home, and at 5 p.m. if you are issuing the tax invoice, then technically you have not followed section 31 subsection 1. Because before removing the goods, you must not be having the goods, you must be having tax invoice with you, so that anytime anyone can trace you and check your bill. As far as GST department is concerned, it will show that there is no tax evasion on the part of the supplier. So this is one point. Now it is also possible that today I have got the bill issued as a recipient, but as a recipient today I cannot go to the shop or I cannot collect that good. So I will say that I will come tomorrow. Government says in this case there is no problem. Before there is no problem. At the time of maximum, at the time of removal of goods, then before or at the time of delivery. That's it. But in one case, government says, in exceptional cases, it is known as provided exception. The government may, on the recommendations of the council, by notification, specify the categories of goods. Categories of goods. That means there may be lakhs of goods, but in some special cases of goods or categories of supplies. Subcategory of supply means any supply which satisfies some particular conditions. So either by name goods are given, or if by name goods are not given, some conditions of supply are given. In that case, government has a right that respect of which a tax in some exceptional cases it is not possible to issue the tax invoice at the time of removal. So government can grant some extra time also. That is why this is what the exception, that through notification government can specify category of goods or category of supplies in which tax invoice will be issued, can be issued within the prescribed time limit. That's it. It completes my concept of section 31 subsection 1. Any problem, please ask, otherwise raise your hand if the concept is clear. Next point. Now let us come to the services. Now in case of goods, goods are tangible. So when I am moving the laptop, these are tangible. I must be having invoice, but services are intangible. So many times you get these services on phone also, and maybe the invoice is not possible to be given or delivered to you at the same time. If I have given a phone call, for example, to any person that please do my AC repairing service, the person on phone call will say that my field boys are already near your house and they will come and repair your AC. Now in this case, the field boys doesn't have the bill, but this service is genuine. So in case of services, Act has not given this condition before or at the time of, because in case of services, I can get the bill after some time after providing the services also. So what subsection 2 says? Registered person supplying taxable, again the word is taxable and registered. A registered person supplying taxable services shall, before or after the provision of service. So before there is no problem, but at the time is not there. Or after, even the services have been provided, after this also invoice can be issued, there is no problem. But this after doesn't have indefinite limit. It is having a prescribed limit. ये नहीं है कि after means you will issue the bill after 2 years, 3 years. No, after, but within a prescribed period. I will tell you that period. Issue a tax invoice. Again the same thing, showing the description, value charged thereon and such other particulars as may be prescribed. So remaining is same. But in services, at the time of word is missing. Simple point, either before or after the provision of service, but within a prescribed period. But here also we have some exception, and here two exceptions are there provided, that the government may, on the recommendations of the council by notification, clause A, specify the categories of services or supplies in respect to which tax invoice shall be issued within the such time and manner as may be prescribed. So this clause is same as that of section 31 subsection 1. Government can name some services, or if not name of services, some supplies where we have some conditions, any service can fit that condition. In those cases, government will tell the exact time that by this time you must issue the invoice. Now this is extra which was missing in case of goods. It is there only in case of services. To the condition mentioned therein, specify the categories of services in respect to which. Now in this case, government is not telling the supplies, government is telling by name those services where even if tax invoice is not there, any other simple document will be equivalent, will be treated as equivalent to tax invoice. As you can see, any other document issued in relation to the supply shall be deemed to be a tax invoice. So other than tax invoice also, another document can be treated as equivalent to tax invoice, or in fact government can tell that in these services you do not need at all a tax invoice, or tax invoice may not be issued. But these provided, these are exceptional cases, not normal. These are exceptional, not normal. I hope the concept is clear. If yes, please raise your hand. Next point. So we have covered goods as well as services. Now subsection 3. Notwithstanding anything contained in subsection 1 and 2. Now subsection 3 is supreme than subsection 1 and 2. Subsection 3 is much supreme than subsection 1 and 2. And what it says, that it does not matter what your subsection 1 and 2 says, what I say is final. So what clause A says, see it. A registered person may, within 1 month from the date of issuance of certificate of registration and in such manner as may be prescribed, issue a revised invoice. So a new word has come, revised invoice, against the invoice already issued during the period beginning with the effective date of registration till the date of issuance of certificate of registration to him. Now what it says, so let me explain it with the help of an example. section 31. Now, as we know that suppose I'm an unregistered person, but the moment my turnover exceeds, aggregate turnover exceeds the limit of 10 lakh, 20 lakh or 40 lakh, whatever is the case, I must apply for registration. So for example, as I have covered in registration chapter, that you are liable for registration the moment your aggregate turnover exceeds the limits. For example, on 27th Jan 2021, I became liable for registration because my turnover exceeded the limit. So within 30 days I must apply, and I have applied, for example, on this same day. But it's not that the moment you apply you will get this certificate. Certificate will get some time. We have some deadlines, and it will take some time to give you the registration certificate. Of course, department will also verify, and then they will issue the certificate. So it's possible that the moment you apply, it doesn't mean that you will get this certificate. Now, 99.99% is sure that you will get this certificate, but till you have the documents in your hand, you cannot say that you are a registered person. For example, you got this certificate on 8th Feb. For example, you got this certificate on 8th Feb. On this date, you received the certificate of registration. On 8th Feb 2021, you received this certificate of registration. You received the certificate of registration. Now, in this case, what it says, now one thing is sure that from 27th Jan 2021 till 8th Feb, for example, registration is received on 8th Feb in the evening. It is issued in the evening. After this, there is no supply on that particular day on 8th Feb. So that means, for example, if registration certificate has been issued to me for whatever time, whatever is the time limit, but till receiving the registration certificate, one thing is sure that tax invoice, compulsory tax invoices were issued. It's sure these were issued. But the moment I have the registration certificate, then if I want, it's not compulsory, if I want, from if I want, for this period, for the period 27th Jan till 8th Feb 21, if I want, for this period, I can issue the revised tax invoice if I want. Why is it so? Because till I got this certificate of registration, I could not have collected the GST on whatever sales happened during this period. Since I didn't have the RC registration certificate, on whatever sales I have done, these invoices were without GST by default. How can you collect GST without having registration certificate? Though you were liable, but you didn't have this certificate, so I could not have collected GST. This is sure. But I must be having tax invoices. But these were not be having GST in this. If I want, but now, when you got the certificate of registration, then one thing is sure that you are liable to pay the tax. You are liable from which date? What is the effective date? Can you tell me the effective date of registration? Effective date is not when you receive. Effective date is what? When you were liable. is my effective date? Effective date is then when you were liable. So from 27 Jan to 8th Feb, tax invoices were issued without GST. But on 27th Jan till 8th Feb, for this period, if I want, I can raise the revised tax invoices. And do you know why I will want it? Because I have to pay the tax on all the supplies which are happening from 27 Jan. Effective date of registration 27 Jan 21, and you are liable to pay GST. You are liable to pay GST from this date. But since you are liable to pay GST on this date, by default, you are eligible for ITC also. You are eligible for input tax credit. And how you can be having how can you claim input tax credit without having proper records? From 27 Jan till 8th Feb, this period when you were liable for registration but you didn't have this certificate, for this period, tax invoices you must have issued, but those were without GST, this is sure. Now, if I want, it's not compulsory. If I want, the moment I received registration certificate, so one thing also here showed that from the date of receiving the registration certificate, then tax invoices will be having by default GST also. There is no compromise in this now. We'll be having GST also. But for this period, 27 Jan to 8th Feb, I didn't have GST. But if I want to revise those earlier tax invoices, I can do so. This is the point which is written in section 31 subsection 3 clause A. If I want to claim ITC, etc., or for other things, I must be having proper required tax invoices. Proper required tax invoice. If I say proper required tax invoice, requirements as per the law, then government says you can issue the revised tax invoices in this period. And I'm not going to ask from my consumers that please come at my shop, I will issue the revised tax invoices. By default, this revised tax invoices will be helpful for you and for the department. That's it. It will be helpful for you and for the department. That's it. If I want to claim ITC, etc., I must be having proper revised tax invoices. So if I want, I have to issue revised tax invoices, and it's not for the consumers who have already purchased the goods or services. These revised tax invoices will be helpful for you and for the department. So it's not compulsory to issue revised tax invoices, it's your choice. I hope you have understood the point. Now, all these words which I am using now, tax invoice, revised tax invoice, these are having fixed format. What should be included in these invoices? So that I will discuss later on. Please raise your hand if the concept is clear. But I should issue the revised tax invoice. If I want, I can issue the revised tax invoices. This freedom is available to me. Now, next point. 31(3)(b). I hope the screen is visible. 31(3)(b). A registered person may not issue a tax invoice. May not. If you want, you can issue, but it's your choice. You may not issue a tax invoice if the value of goods or services or both supplied is less than 200 rupees, subject to such conditions and in such manner as may be prescribed. Now, in so many businesses, You sell small items also, like a big registered stationery shop. Stationery. A consumer can go and purchase a refill of 5 rupees, 10 rupees, a pen of 20 rupees. If every time that stationery shop owners start issuing the tax invoices, it's very complicated then for that shop owner. So government says that no issue. In case your value does not exceed, value of supply doesn't exceed 200 rupees, then it's your choice. You can skip issuing the tax invoice. If you want to issue tax invoice, there is no problem. We are good, we are comfortable. But it's your freedom. If you don't want to issue tax invoice till 200 rupees value supply, don't issue it. But it comes with some condition. It is mentioned in the act that condition, because in some cases even issuing the invoice of 1 rupee is mandatory. So conditions I will discuss later on. This is my close B. Close C. Registered person supplying exempted goods. So this is a new word now, exempted. Section 31 subsection 1 and 2 talks about taxable goods. What about those which are exempt? There are lakhs of products which are exempt. There is no tax on this, educational services, etc., etc. So in those cases, my clause C says, a registered person supplying exempted goods or services or both, or paying tax under the provisions of section 10. Now, do you remember paying tax under the provisions of section 10 is what? Composition levy scheme. All those composition levy scheme suppliers. These people shall means must have to issue rather than tax invoice, because tax invoice is not required. They don't charge GST, but they need a bill. So that is known as BOS, bill of supply, containing such particulars and in such manner as may be prescribed. That's it. So exempt supplier of exempted goods and services, or suppliers covered under composition levy scheme, these people are not supposed to issue tax invoice. They have to issue, not they can, bill of supply. And provided is same. This provided is same, that in case the value of supply does not exceed 200, then they may not issue a bill of supply, but it comes with some conditions and requirements. This is clause C. Clause D. Now, in so many cases, you make advance payment before you want to purchase the product. In case of advance payment, issuing receipt voucher is there. If I want to purchase a laptop of, for example, 1.50 lakh rupees, then in that case, shopkeeper is asking me to give me rupees 20,000. So shopkeeper will give me or receipt voucher of 20,000 rupees. This is closed D. A registered person shall, on receipt of advance payment with respect to any supply of goods or services or both, issue a receipt voucher or any other document containing such particulars as may be prescribed, evidencing receipt of such payment. So this is the requirement of receipt voucher, which a supplier has to issue, which shows proof of such payment. This is my clause D. Now you can see so many terms being used here: tax invoice, revised tax invoice, bill of supply, receipt voucher. All these are having separate rule, that what these things are having, what these documents must be having. So you can notice any bill of supply, any tax invoice, when you purchase anything from different shop, almost everything will be same. Why? Because of those rules which I will show you later on. For the time being, I am reading the concept. Now, this clause E, not subsection E, clause E. Refund voucher. What refund voucher is? So many times what happens is, I have given some advance to any person that please, I'm going to purchase a laptop of 1.50 lakh rupees tomorrow. Shopkeeper says, okay, give me 20,000 advance. I have given 20,000. But tomorrow when I will go to the shopkeeper or the person who is supplying the laptop, he will say, for example, he will say that this laptop I cannot sell. I cannot provide this laptop to you because company has stopped supplying these laptops. So what will happen in that case? Refund will happen. This is what clause E is. Where on receipt of advance payment with respect to any supply of goods or services or both, when you received advance, the registered person issues a receipt voucher The moment you received advance, you have to issue receipt voucher, but subsequently no supply is made. But you are not making any supply against that refund. And since you are not making supply, no tax invoice is issued in pursuance thereof, of course. Then the said registered person may issue to the person who had made the payment a refund voucher against the payment. So that person has to issue what? A refund voucher if the recipient asks. That is why it says may issue. If recipient is requiring that proof that supply cannot be made, so give me a refund voucher, that person has to issue a refund voucher. So another term, refund voucher. F now. Close F. It is basically for reverse charge mechanism circumstances. A registered person who is liable to pay tax under subsection 3 or subsection 4 of section 9. Do you remember subsection 3 or 4 of section 9? These were reverse charge mechanism cases. Any person who is liable to pay tax under reverse charge, who is liable to pay under reverse charge? Who is liable to pay tax under reverse charge? Supplier or the recipient? Recipient, of course. Because when reverse charge is applicable, when supplier is an unregistered person and recipient is a registered person. So in that case, this recipient has to issue the invoice and make sure that under GST laws, invoice or tax invoice is one and the same thing. Under GST laws, invoice and tax invoice is same thing. So whether I use the word or act uses the word invoice or tax invoice, there is no difference. So as per clause F, a registered person who is liable to pay tax under reverse charge mechanism, that recipient has to issue the tax invoice if goods are received from the supplier who is not registered on the day when goods are received. Clause G is also similar, but clause G says registered person who is liable to pay tax under subsection 3 or 4 of section 9 shall issue a payment voucher at the time of making payment to the supplier. So this is also same. When a person who is covered under reverse charge mechanism is making any payment to the supplier, that recipient who is making the payment, that person has to issue a payment voucher also. So these are some of the points which you have to learn. Tax invoices, tax invoice, revised tax invoice, bill of supply, receipt voucher, refund voucher, payment voucher. That's it. So I think let us wind up this session till this point only. Section 31, subsection 1, 2 and 3. And in the next class, we will be having the discussion continuing on section 31. Goodbye from my side. Thanks.